All right. Good morning and welcome to Foundation Friday. Today, we are lucky to have Saul Bailey with us from Cornerstone Lending, and he's going to share with us some strategies to make housing more affordable, which I think we all need right now. Saul.
Yes. Thanks, Jason. So yeah, I'm Saul Bailey, and I just put together just a bit of a presentation. I think essentially what we're all dealing with right now is an affordability crisis. And so as the market has shifted, just let's say over the last year and a half, one of the things that I've noticed in my industry, in the mortgage industry, and also on the real estate side of things is we have, and I was guilty of this as well, like we got away from being really good advisors and really good guides, and we got away from doing a proper presentation and sharing our clients all of the different options and helping them to understand and maybe think about things differently when it comes to home financing or when it comes to home buying or, building wealth through real estate. So not to say everybody did that, but I think we were all so dang busy for so long. We were just, I became kind of a fast food order taking loan officer, like, hey, here's your loan, here's the rate, the rate's awesome, let's go. Waive your contingencies. So those days obviously are over at this point, but it's become a return to where we say, okay, let's slow down. Let's take some more time with our clients. More than ever, they're looking at the realtor, they're looking at the lender as, be my guide, help me with clarity, help me gain confidence, help me feel really good about what I'm going to do and that I'm going to be making the right decision. And so that's kind of the spirit around like what we came up with and what we're doing with all of our clients right now. And that's taking them through a proper presentation and really uncovering kind of like, where are your fears? What do your finances look like? What are your dreams? Like, how can we make this affordable for you? And how can we make you see the vision of it on a long-term basis? And that's not to force them into buying a home, but it's also just to give them all of the information so they can make a good decision. So with that being said, can I get a show of hands or just throw it in the chat if you have buyers who were previously searching or previously in the market, maybe earlier this year or last year or whatever, and are now on the sidelines and not doing anything? Carrie? Check the chat here. Chris? Okay. So that is super common. And one of the things that I do with my realtor partners is I have them make a list of people that have quit getting back to you or said, hey, I'm out of the market right now. Rates are too high. I can't afford it. Make a list, send that to your lenders, send it to your lending partners. Have your lending partners have a different discussion. Have your lending partners, maybe if you had them talk to one lender before, have them have a different discussion with another lender and maybe queue it up as, hey, I know you were pre-approved before. I know you had some different lending options. Things have changed. The market has shifted. There may be another way to make this affordable for you or to make this make sense. So that's what I do a lot with my realtors. They send me a list of those buyers. I follow up with those buyers. We're having different conversations. And for some of those buyers, they are now back in the market searching for homes. So that's just one idea that I thought about besides these three strategies. But I'll jump into kind of the main things that we're doing. And the first one is, there we are, strategy one. So people are saying, well, gosh, maybe I'll just rent. It's less expensive to rent versus owning right now. And for the most part, that's actually true. Okay. But again, going through and taking a deeper dive and a deeper look at things, this is what we do with our clients when they're trying to figure out or reconcile, should I rent or should I own? And, I just put together, I don't know, does anybody have lenders or is anybody familiar with Mortgage Coach at all in terms of presenting to clients?
Yeah, I don't think so. Yeah.
Okay.
Okay. Yeah, we got a lender that does Mortgage Coach.
Yeah.
Okay. Okay. So Mortgage Coach is a fantastic platform to be able to do reinvestment strategies, rent versus own analysis, kind of the long-term approach of wealth building, things like this. And so that's kind of what you're looking at over here in these two summaries and a rent versus own analysis, and kind of the exercise that we take clients through. The assumptions over here for this example that I put together for you guys is we've got a married couple earning 150 grand a year, 22% tax bracket, taking a standard deduction as renters at 25,900 a year. Average rent, let's say they're renting a home for $3,000 a month with a 5% annual rent increase. So they want to buy a house, let's say around 700,000. I made some assumptions of a 4% annual appreciation rate per year. Very fair. And their ideal monthly payment would be like $4,500 a month. So over here, what we looked at is, okay, well, let's look at what let's look at this bottom one first, the summary of rent. After the tax benefit, let me move this out of the way. Monthly rent net is going to be $2,650 a month. Okay, your tax benefit on a 30-year fixed mortgage, 7.5. I did this about 10 days ago. Rates are moving, so all things
Saul, could
being
you
equal.
like zoom in on those numbers when you're showing us that?
Yeah, sorry about that.
That's okay. Just a little bit small.
Okay, let me pop in here. Okay. You guys see that better? Little.
Oh, yes,
Yeah.
that's better. Thank you. Sorry.
Yeah. Okay. So here's our comparison. Let's say rent with, parking and utilities and rental insurance and everything like that. We did $3,125 a month. Tax benefit adjusted $2,650 a month in terms of rent. Now over here on a 30-year fixed, so with everything accounted for with the tax benefit, principal paid, your net payment is going to be almost $3,400 a month. So this is what we show clients. So we say, yes, indeed, it definitely is still more to buy a home versus rent. Okay. However, if you look over here, this is where we start having a different conversation and showing them something different. And we say, let's look at the long-term approach of things. Yes, right now it feels expensive to buy a home. However, let's fast forward this over 5 years. What are things going to look like? And what is your net equity? What is your net wealth position going to be at the end of 5 years versus here's your 30-year fixed, same position. Your net equity or your net worth is going to be a little over $300,000 with those very conservative assumptions that we've made. And so when people start seeing that and they're like, gosh, well, maybe I can make it work. Maybe I can figure this out. And another conversation that we'll have is like, look, we know maybe where you want to be in terms of purchasing a home as far as price point. But what if you made a sacrifice? What if you bought down a little bit initially to get to that place within 5 years, something like that? So these are kind of the different things that we talk to buyers about, and showing them kind of how the gap closes, considering the tax benefits, overall net worth creation. We also talk to them about this, like, how is this going to feel for you? Like, let's fast forward 5 years. Like if you make the sacrifice or you say, okay, we can make this happen or we can make this work. And then the last thing is a lot of times people and buyers get caught up in the fact of like, here's what my income is right now. Here's what my student loan payments are right now. Here's what my car payment is right now. But we always point out also that your financial situation is not finite. So we point out, do you get raises? Do you get bonuses? What debt do you have falling off? Things like this. So where they can start thinking more than just in today and say, okay, well, yeah, gosh, my car's almost done, or, I've got a raise coming up or something like that, to help reconcile the fact that they will be able to make this happen in that regard. And again, it's still not going to work for a lot of people, but by having these deeper conversations and showing that information, that's where we get a lot of buyers where they're like, gosh, thank you for showing me that. I think homeownership can still work for me despite the higher rates and the payments. So that's one strategy we're using. The next one is this. Let me get back here. Questions on the rent versus own it all, guys?
No questions
Nope.
really, but I
Okay.
think, and that's where something that we need to focus on pretty heavily right now. And I think that Saul, right now, one of the reasons why we're not having a collapse is in the housing market is because people do have that 390 or 400 or 5, 6, $700,000 in equity, right? And it has really changed the game. And I'm one of those people. And I can tell you, it's a pretty doggone good feeling. And yeah, if you can fast forward to that 5 years where you have that versus nothing, yeah, I think it's worth it. So
Yeah, and that's again, just, you're exactly right, Jason. Like having a deeper conversation with clients where they say, gosh, it's just too expensive at face value to buy. Okay, yes, I get it. It's not going to be like that forever. And also let's look at where are some things where we can maybe make some adjustments. Again, even if it's like buying less than what maybe you forego that third bathroom or that, fourth bedroom or whatever the case might be, to get to that place where you're developing wealth. So yeah, exactly. The other thing too is as far as like creating affordability. So this is strategy too. And I don't know, are you folks that are on that call, like, are you starting to see more sellers giving concessions, allowing for buy downs, things like that right now? Or I know it's kind of spotty, it seems, but in different areas, there's still multiple offers. And then in some, I'm getting $25,000 seller credit. So what's your guys' experience?
Yeah, it's a mixed bag. And
Yeah.
I don't feel there's any real rhyme or reason on it. Sometimes like I'll see a home and I'll feel like, there's probably gonna be a lot of activity, a lot of offers, and it just sits there. And
Yeah.
then other homes, there are 4 or 5 offers, competing and escalates and waiving all contingencies. It's crazy.
Yeah. I see the same thing, Chris. It's weird. And same thing with a lot of the realtors that I work with. But that, kind of along the lines of strategy too. Sometimes this is applicable, and in some areas it will be, some it will not be, but we are getting a lot of seller subsidies right now. We're doing lender subsidies. Like right now we have which Priority doesn't have, but we do have as Cornerstone, and that is a 1-year lender paid buy down. So we reduce the buyer's interest rate for the first year for free, no buyer, no seller, no realtor, concessions that have to be made. So that's another way that we're helping to create affordability. But, a seller paid buy down, always an option. I actually do a series on a seller buy down kind of program. There's actually 12 different use cases that you can take a seller buy down to. If you're a listing agent, if you get a lowball offer, how do you counter a lowball offer? Well, there's a way to do that with a seller buy down. How do you cover an appraisal gap? So you've got an appraisal gap strategy where you can use that both on the listing or the buyer side. That's another thing where we put together different buy down options for buyers if that's applicable. And then we also say, well, here's what happens if maybe you overbid and you've got an appraisal gap. How do we still give you the comfort that you're going to be able to still buy that home without having to come in with a ton of money? So we have a strategy around that. So these are all things that we talk about. But, as far as kind of from the real estate side, like, gosh, if you can do a seller buy down versus a price drop, and that's the other thing is, like, you see builders are resale agents' biggest competition, and builders are very adept at moving inventory. And what do they go to? They go to concessions. They try and protect price at all costs. And so that's something that I help educate my agents on, is like, before you drop price again, call me. Let's put together a seller buy down strategy where if you're dropping price like $30,000, you're not necessarily solving the bigger problem. And in most cases right now, the bigger problem, again, goes back to affordability. So if you drop price $30,000, you might be able to lower a buyer's payment by $150. But if you give a $30,000 seller buy down credit, gosh, you can do a 2-1 buy down and probably reduce their payment by $700 to $900 a month in year 1, half of that in year 2. So that's a much better use of funds. It also protects your farm. Okay. It protects price. and creates affordability. So it's kind of a win-win for everybody. So have you guys talked about those strategies with other lenders at all? Or are you familiar with some of that?
Can I just pipe in on that? I think that
Yeah.
the harder thing for a buyer, if a seller is not promoting that initially,
Mhm.
a buyer's looking at that price and saying, I'm staying clear away from a property that's 30,000 more than I want to pay for. So
Right.
if a seller's not promoting it on their end, I think it's a lot harder for the buyer to wrap around the idea to you know, obviously it's our responsibility to try and, you know, create that negotiation with that other side, but it's much harder to get a buyer to consider a price point at that level.
Right. That's a great, is it Kati? Is that your name?
Yeah,
Is that how I
that's
say it?
pretty close,
Okay.
Kati.
Kati. Okay. Thanks,
Yeah.
Kati. You bring me to my next point here, and that is, again, education around it. So that's also like I have a buyer's agent and a buyer's playbook where we actually cover this particular strategy when a buyer is initially pre-approved, saying like, hey, if you find a home that's maybe a little bit above your price point where we've actually approved you, don't necessarily discount it. There may be something that can be done between all parties to make that home affordable for you. And again, it's about creating education with the buyer and having them get that buy-in, saying like, okay, well, yeah, the home is 800,000. I get it. I don't want to pay 800,000, but if I can get something from the seller to help me lower my payments, I'll probably be able to live with that. So again, it's about educating and kind of putting that side by side before buyers. And I'll send some stuff over to Jason after the call with a seller buy down strategy that way, and kind of how we frame it up and share it with a buyer. But more importantly, you have a really good point. It's marketing that overall concept between listing and buyer's agents, and actually have a platform where we do that and we help you market that between each other. Again, creating awareness where a lot of agents aren't aware of it, or they've been trained to just automatically move to price drop. Well, that typically works in a low interest rate environment. Absolutely. But in a higher rate environment, we have to get more creative. So there's different marketing aspects of that we can work with on you too. So yeah. Does that help?
Yes,
Okay.
it does.
Cool. On to strategy 3, and that is basically fear of loss and cost of waiting. So cost of waiting, can you guys see this well?
Yeah, that one's pretty clear.
Okay, cool. So this is super straightforward. I mean, this is just simple math. So right now, let's say we're at 8% on a 30-year fixed mortgage today. Here's a buyer's payment. You know, what did I do here? I did a 10% down payment. So total monthly payment right around $5,500 a month. You know, in terms of, well, gosh, I think I'm going to wait until the rates drop. Yeah, very common. We've all heard that one. So this is where we educate around that and say, well, for every 1% interest rate drop in our market, we expect home prices to probably rise by about 10% based on the lack of inventory and the pent up demand in the marketplace. So what we put here is, okay, well, what happens in a year when rates drop to 7%? So that sales price now becomes 10% higher. Here's your 7% rate. Your actual cash to close and your payments are higher. Plus, you've lost out on that equity that you may have built over the next 12 months. What if you wait 2 years? What if we go down another 1% to 6%? And I do believe that we will see interest rates drop. I would say over the next 18 to 24 months. A lot of people say within the next year. I would say probably closer to 18 months. And that's typically what I advise my buyers on when they're kind of projecting for things. But what happens at 6%? Well, your payment stays about the same. Your cash to close increases pretty considerably. What about another way? I love the seller buy down. Again, not applicable for everything, but what if we can do a seller buy down and we do, I think this was a $20,000 buy down, and we get a buyer at 6% interest rate at that same sales price. So you preserve price, and now their payments are $4,600 a month. So just an option there. So So that's another thing that we talk to them about. And, creativity, education, giving clarity and confidence to buyers. These 3 strategies that we talk through with them, again, typically helps them figure out, well, I still don't want to buy, or, hey, this probably makes sense to where I can stretch somewhere or change my plans or, anything like that to be able to move forward and buy a home. So that's about it. Those are the 3 strategies that we're leaning on heavily right now. So questions, comments?